Hello, everyone. My name is Brooke Hart, president here at Presilium Private Wealth, and today I wanted to talk to you about an important topic in your retirement income planning, required minimum distributions, or RMDs. An RMD is just that, a required minimum distribution that must come out of your IRA or 401k each year once you're at least 72 years old. As for the calculation to determine the exact amount to distribute, this can get slightly trickier, and it may make sense to work with a certified financial planner professional on their team to ensure that this is done correctly. The calculation involves using the account balance as of the end of the prior year and dividing it by a distribution period from the IRS's Uniform Lifetime Table. And when it comes to the distribution options, RMDs become more straightforward. You can either take this distribution directly to your bank account or transfer these dollars to a brokerage account to remain invested. You can also donate the distribution directly to your charity of choice in what is known as a qualified charitable distribution. The major key to all of this is that you are taking a distribution, as the consequences for not taking your RMDs or not taking a large enough RMD can be quite significant in the form of a 50% excise tax on the amount that is not distributed as required. So it's important that you either track this closely yourself or that you work with a team of professionals who track this very closely for you to ensure that you can avoid any unnecessary penalties or taxes. Now, in the year in which your age triggers your first RMD, you actually have until April 1st of the following calendar year to take your first distribution. And every year thereafter, you must take your distribution by December 31st. And while it's nice to have that buffer of time built in for that first year of distributions, it's also important to remember that if you do choose to delay that first distribution until the following April, you are still responsible for that next year's RMD alongside the prior year's distribution, which could possibly cause an increase in your taxes owed that year due to the double distribution. Another often misunderstood aspect of RMDs, which we plan to cover in our next video in this series, involves the distributions from retirement accounts that you inherit. However, in the meantime, for those who have questions on their current or upcoming RMDs or general strategy around distributions, please call or email us. We are happy to review this in detail with you whenever works best for your schedule. Thank you again for taking the time to join us, and we look forward to talking with you again soon.